All right, folks. Let us go. Let us go. It's going to be an absolutely spectacular week. I believe it. And we are going to make it happen together. Get out your notepads, get out your pens, get out your charts. Let me know that you can hear me loud and clear. Audio-wise, my charts will be on your screen shortly. Right, so 1, 2, 3, and go. There we are. Right, so can you hear me? Loud, clear, no issues. Excellent. Cool. Right, so we got the week started last night with some excellent analysis by Talkback, and I mean literal excellent stuff. One of the things we've been struggling with is how much of the concepts we trade with should we include in our analysis sessions, because there's been the temptation to quote unquote show off how quote unquote good we are, but we understand that this channel is primarily not quote unquote for that. It's to give a forum for the people we train, the students we work with, and even the people who aren't necessarily registered but are around the fringes for free. Is to give you a framework within which you can develop and improve and fulfill your potential as traders. And so there's no point incorporating things when we're demonstrating analysis that we haven't taken the time to teach you yet. But we've covered quite a lot of ground in the last month, and so we now feel the freedom to begin to inculcate some of the stuff. And I thought yesterday's analysis session was absolutely brilliant. Now, on Monday night, or sometimes on Sunday night when we do the analysis sessions there, we are predicting. Tuesday is usually the first day of the week, usually, not always, sometimes Monday does it, where you start to see your predictions either play out or not. And so we are starting to see some of the stuff that we showed on Friday and on last night. We talked about start to play out and know what steps to take, what decisions to make. So these are the charts that I am working with. I am going to go to a set of charts with nothing on them and just start from scratch. So let's see. So that you can see how I am building up to where I'm going. So let's just put in brand new. And today I am going to look at my watch list for this week, which is about 4 pairs in total. So I might teach you a couple of things for the first time as we go about as well. If there's something that I'm about to use that I realize we haven't touched you yet, I will just show it to you real quick. And that's how we're going to do the analysis sessions moving forwards. We'll teach stuff that is relevant as we go along. Right, so let's get rid of all those zones. There we go. Right, so off you go. Brand new Virgin chart. Now, I'm going to take you through this now that you're up to speed with the way I trade. I'm now going to approach this analysis, perhaps for the first time in the last few months, dealing with this batch of students from the perspective that as if I am looking for a trade now. So I want you to watch or watch what you're seeing from the perspective of Israel is looking for a trade. Now, if I was looking for one, I slept through the first, well, not, yeah, slept through the first one of the day, which is this one. It is a trade I would have taken. I didn't because I was waiting for New York. I made a business decision to get some sleep last night. But this is how I would work. First of all, my reference chart's the 4 hour. So apply these principles to whatever it is, or however it is that you trade, your concepts, your scenarios, your signals, your entries, and your management. So if you are a swing trader, you'll be doing this on a 1 hour chart, on a daily chart. If you're a scalper, maybe on a 15-minute, whatever it is. If you're a position trader, you'd be doing this on a weekly. Whatever your reference chart is, meaning this is the chart on which I am tracking scenarios. This is the chart on which I am, in essence, knowing or stalking a setup. Let's put it that way. So in essence, I'm technically trading this time frame. Every other time frame above or beneath is helping me frame something. I want to repeat that. Your reference time frame is the one you are technically trading. The other time frames are there to help you get a bias directionally, to frame or filter something, or to refine an entry on exit to make it more palatable risk-wise. I cannot say that enough. You need to know what time frame technically am I trading. And for me, that is almost always the 4 hour. Sometimes I will drop it down to the 1 hour, but I'm always aware this is my reference time frame. Cool. So with that in mind, the first question is, what kind of setup am I looking for? Everybody has their own signature. I primarily look for, this is Israel now, stop hunts, right? Stop hunt into market structure breaks, taking intermediate liquidity, and using order blocks as my order blocks highs and lows as my primary liquidity profiles. There are other signatures you can form using the same time frame. In essence, when I look at this, this is what I'm asking myself. Where was the last stop hunt reversal on a 4 hour chart? I'm going to throw some stuff in here today that I haven't taught you before. So, but I want to reiterate the things I have taught you before. Where was the last, or where were the last few stop hunts reversals? So, quickly, there's one here. Price took out that high and then broke structure. Where did it break structure? There. Why do we say that was the structure that broke? Well, this was the last 4 hour high, 4 hour low. It's a low because there's a lower candle there, so a higher candle there and a higher candle here. It doesn't have to be too obvious, it just has to be technically correct. Is there at least one candle either side that is higher? If that's the case, it's a low. That low drove price in here. If you want to be pedantic, can I just realize, technically it was this one here. Technically that was the one that drove it in there. So I'm going to put that there and put that there. It doesn't really matter because whichever one you chose, you would be in the same boat now. So price takes that out and then breaks that structure first and then this structure. Right? Coming into the week, what that said to us was we should be looking potentially at short signals. In essence, we should be looking at price to rally back into this region somewhere here, either in here or here, and then short. Now, this is something that I haven't taught you guys before. So welcome to this. Using that, if I then drop down to 1 hour chart, so this is now my signal chart, right? I'm using it to refine a signal of a 4-hour scenario. At this point in time, I haven't even looked at my bias, my directional bias. I'm going to come to that in a second. Well, this is something that took me plenty of pain to spot in the market. In hindsight, if I'd listened, or if I'd listened carefully to something that a mentor of mine had said years ago, I probably would have figured this out easily. But I didn't really get it when he said it. It didn't make sense. I couldn't see it. I had to find it myself. And then recently, going back over some material, some notes I took from some material from that mentor, I realized, snap, it was staring me in the face. It just wasn't put in black and white. Remember, we're dealing with an algorithm, right? It's a computer program. It's not artificial intelligence per se. Or it's not natural intelligence. It needs rules and, patterns and variables to work with. So the question is, how does the algorithm know when, from a market maker's perspective, it should be bullish or bearish? The first thing, like I told you, is it needs to go back in time, and it works in trading months. A trading month is 20 days. There's 20 trading days every month. So it'll look back 20 days, then another 20, then another 20, and then it'll keep looking back in blocks of 20 days until it finds something to key off. What is it keying off? It's keying off significant levels, daily highs and lows, like Tucker taught you, weekly highs and lows, monthly highs and lows. So for me as an intra-week trader, I can get signals of daily highs and lows. If you are a swing trader, you want to be looking at primarily weekly highs and lows. And if you're a position trader, monthly highs and lows. So this setup that told me coming into the week to initially look bearish, we're going to come to the fact that that may have changed in a second, occurred in this time frame, this time zone, this time space. It started there. Come on. In essence, that was the high where this all began. That was nicked. And at the start of our week, or as at the start of this morning, going into Tuesday, that is the time zone, is the time space that has framed this setup. Let me know in the comment section if you understand what I mean. The setup started when that high formed there. I'll just pull this away so you can see the high clearly. Right? At the time, we didn't know it was a setup, but now in hindsight, we realize that was where this stop hunt was keyed off, and then price began to drive lower on a 4-hour chart, first of all, right? So if I drop down to 1-hour chart, the reason I'm dropping down to 1-hour chart is this. I can now see my daily highs and lows clearly. Every divider on a 1-hour chart is a day. So I can see the daily highs and lows clearly. Now, in this process, it took out that 4-hour high there. It also took out this one here. This is also a 4-hour high. Right? If I go down there, I then have to ask myself, again, I'm thinking like a computer. How does the computer know at that point it starts to move down over the long term, not just as a short-term manipulation? Well, something I discovered, and like I said, the clues were there in a mentor's work from years ago. I just didn't see them. that it is looking for an engulfing on a daily, weekly, and monthly level. Now, that much was obvious, right? That's why, for instance, we've taught you don't trade against a daily bias, meaning if you see a daily engulfing, the last daily, always trade in the direction of the daily engulfing if you're an intraday trader. So when you see a daily engulfing here, for instance, this candle here takes out that day and that day. Boom. So you know you can start moving down. Well, how do you see it intraday, intra-week? This is how you see it. I'm going to change this color for you now. I'm going to make this green to demonstrate that it's a high, meaning green, positive, according to my cadence. And I'm going to put it at this thickness to show what we're talking about. Now, we're talking about daily highs and lows. That is a daily high. The low of the same day is here. So I'm going to move that down there. And I'm going to change the color to red. In essence, this day here, right, has now been engulfed. It was stop rated or stop hunted to the upside until price breaks down beneath that level there. If I'm thinking like a computer program, I'm not in sell mode yet. It could sell short term, but bear in mind, I'm looking for a trade that will last me 3 or 4 days over the course of a week. Once this completes, I now switch temporarily to a sell mentality. And I am going to draw a Fibonacci from the high that breached the daily high to the low that breached the daily low on a 1 hour chart. I want price to get back at least here, where, you guessed it, the fair value level. I'm going to put that in blue as a neutral level. Let's take the Fibonacci away now. Let's take that away. Now, this is something I've been using for a while, but I just couldn't show you yet because you weren't ready for it. Now you are. So, I can now take this away as well. I can also take this away. If I'm not scalping, this is the setup I'm looking for. Price should get back to at or just about that level. It could be higher, could be slightly lower. Question now is, where are the liquidity profiles around that level? Well, there's one here. There's another block there. There's another one here because, as you can see, I told you, when you see a significant wick, it's also hiding a manipulation block in another time frame. So I'm going to extend that to the top of the wick and extend it to the bottom as well, because both the top and bottom wicks are at least as big, if not bigger, than the body of the candle. So that entire zone there could see a reaction. Also, there is this one here. That's also, again, a manipulation block there. But as you can see, there's a huge wick all the way down there. So I'm going to put that in there. And then finally, there's this one here. There's this manipulation block there. going to put that in there. In essence, anywhere from here to here, we could see a reaction. Also, it could go back to the parent order block, which in this case would be there. If I put my Fibonacci back, it's quite obvious what's going on. From that high to, so the, no, not there. From the high that broke up there, because that's a market maker range now. That's a market maker range. The high that broke there to the low that broke down here. That's 50. That's 60. 1.8. That's 78.6. In essence, any premium level of a 1 hour reaction is live. Cool. So I've just drawn all this just to say there's 4 zones it could happen, and they're all from 50 to 78.6, or from 38.2, sorry, to 78.6. I'm sure nobody is deeply surprised about that. That's just normal. So how do we take advantage of this is the question I hear you ask, because there's no point knowing about all these technical concepts if we can't use them. Well, I'm glad you asked as well. Very simple. I'm leaving that purple line there because it's also a significant 4-hour market structure break. Well, the question is, once you get past that red line there, right, where is price going to turn significantly? Well, the question is, you start hunting, or the answer is, you start hunting a 1 hour market structure stop hunt break. So where are the 1 hour levels? Well, there's one here. One second. So there's one there. When price breaks down behind it, does it move significantly? Yes, it does. What does it move into? Into that level there. And it rejects. Good question, Kieran. Why not extend it down? You could, is the answer. So let me do that for you. You could, and it would still work significantly as well, right? In which case, that old 50 now becomes a 61.8. But I'm saying, in triggering, in my opinion, this is my opinion of how I believe this algorithm may work, based on, one, my own experience, my own research, and like I said, reviewing the work of an old mentor of mine. There to there was the range that triggered the sell side of sell program, for lack of a better word. So that high to that low there is a range. I would expect price to at least hit the 50% of that range. In terms of refining my trade entry, yes, I could do this. In terms of looking for, so you see here that the 61.8 or 78.6 has breached that 50. But I'm just using that to say I want to see price come back there at least. So I hope that answers your question. Right, so that there, actually I'm on the wrong time frame for this, sorry. So I didn't go back to a 4-hour time frame. And remember, everything I'm doing, the way my personal signature for scenarios, the one I trade live with, several others I test. I can show you a few in the mentorship, closed mentorship forum, and see which one works for you. This one works for me. Is I want to see 4-hour stop hunts, and so I believe the price has started to turn when it takes out a 4-hour low and then reverses to the upside. So that would be the first 4 hour low. There, that one. That would have formed on Friday. So once that low forms and price comes back there, I drop down to 1 hour chart. I showed you this last week. And I'm looking for a 1 hour stop hunt market structure break. Did I get it? So that's the low. Look for 1 hour market stop hunt. So price nicks it there. Does it give me a market structure break when it nicks it here? Does it give me a market structure break? Technically, you can argue it did. However, I would not accept this as a valid high for market structure break. It's not clear enough. Which is the high of these two? Is this higher than this? If let's check these two candles. That candle's high is 17751, and this one is 17751. So they're the exact same high. To me, that's not clear. In essence, this could be higher than this. If that's higher than this, then so stay away from that. That's the one that you're looking for that drove into there. Do we get there? The answer is no. So we keep moving. Of course, the failed market structure break itself creates a new 4 hour low there. We drop down again to 1 hour chart. Do we see a market structure break? Well, this is the high that drove price down into that low. And now it has been violated to the upside. If you want to be pedantic, now I'm just being honest. What I'm about to show you does meet the requirement, but I wouldn't have taken it. It looks good in hindsight. I like to be honest with stuff I would not have taken in hindsight. It looks good in hindsight to say that technically this was the high, right? Look there. Let me blow that up a little bit for you. The high of that candle is 17424. The high of this candle is 1742. So in essence, this candle here is a high. It's higher than that one and higher than this one. And so the argument is you could also this candle here as well actually would work quite well. This one here, 17444, it's higher than this, higher than that. So you could argue that it was this candle that drove price into that level, and therefore the market structure break should be there. And as you can see, once put that in blue, and as you can see, once price did go above it, it came back down into the order block, and then it ran away. Now, I just wouldn't have taken that. I'm just being honest. It's too cute for me. I'd have left it alone. Now, let me look at this actually. I've not checked this. Which one is lower? The low one that is 17215. The low one that is 17221. Okay. So this is lower than that. That's fine. In which case, this was the reaction, and we're off to the races. Now, could you have taken advantage of that? Yes. Drop down to a 15-minute chart. Let's put in the Asian range. Actually, let's put in let's put in the Asian range. So because we're 2 hours ahead of GMT on my broker. So The day opened there. We're taking an entry definitely beneath the daily open. We would have preferred it beneath the Asian open, but the low of the Asian range, but that's not compulsory. As long as it's beneath the daily open there. Reaction on a 1 hour chart. Right? You're in at here and you're holding for there. I didn't take it. Just being honest with you. I was awake. I was semi-asleep looking at my laptop. I just thought, nah, I'm not sure. I wouldn't take it. But I'm reasonably expecting that to get somewhere in that region. Which, if this program holds, we should then see a move to the downside, right? So if that's, so Kieran, this is now your question, right? If that is the Fibonacci range, and we get a premium retracement above that line there, we're holding for either the 121, the 140, or the 161. So where are the levels that match that? Well, let's see. There is that there. It matches the 161. There's that low there. In which case, if price were just to come for that low, to clear out the stops beneath it, it would match the 121. Anyway, somewhere in that region there. Now, having said that, let's go do now what I've taught you to do in the past. What's our directional bias? Now, coming into today, it looked like we were clearly bearish, right? On a daily chart, it looked like, so we'd had an engulfing and then a follow-up day. So it looked like we were clearly bearish, sorry. However, like I was showing you yesterday, you need to take a few things into consideration. Look at that low there. Can you see? Put that in green because this is a daily chart now. Can you see how the low of today matched almost to the pip? This is the low of this candle is, come on. It's not giving it to me. MetaTrader does this sometimes. Yeah, I'm look. Anyway, you can see these two candles have an almost equidistant low there. Now, this is my thought process. So that's bounced up. Now, my question is, let me get this out the way, is, do I believe that a market maker is going to leave equidistant lows, equal lows in a 4-hour chart and a daily chart, and not want to tap into them? The answer is no. I don't believe that for a second. Right? First of all, simply just doing this on its own would work. Just dip into that beneath there and move. Now, let's see. The low of that candle, 17215. The low of this candle, 17215. To the pip. You see how these things work? To the pip. So you could have called, when you saw this reaction, what day was this now? This was in Asia, so you would have been asleep. But this here was pretty much perfectly, second, I need to adjust that crooked line. Was pretty much perfectly called by that previous day's low. It's not left. It's now left what to me is a juicy liquidity level too juicy to ignore. I firmly expect to see that happen, but I do not want today to close as an engulfing. If today closes as a bullish engulfing, all bets are off. I want to see it tag there and run back down today. Over the next 24 hours, I want to see that happen. Hit that level. Actually, let me frame that now. Look at that here. The low of so Tuesday, Monday, Friday, Thursday's low. That may not get there now that I think about it because of here. This may be where it reacts off. Anyway, on the 1 hour chart, I'm looking to see a 1 hour engulfing at some point today, maybe London close, that sets off a run down in here to this level here. It might not happen today. If they could just keep blowing through, that's fine. But I've got my eye on these equidistant lows there. And the further up they go before they start coming down, the better the trade for me. In terms of a long-term expectation, what am I looking for? So now that I've shown you that, what am I looking for? Well, Tucker showed that yesterday, so I don't even know if I need to go into all that today. But okay, let me see what I can hook you up with. For EURUSD. So, monthly levels. Where are we looking? Well, that there has now been touched twice. So I'm looking to see, well, we've started looking at that already. It started happening already. Let's refine that. One second. Right. Let's refine that on a weekly chart. Put it in maroon because it's a weekly. That level there. We're there at the moment. Also, so if we, from that level, either way, on the way up or the way down, if we're coming down, well, there's that. If we're going up, there is that. If I go down the weekly chart and refine it, right? So if we're going up, we've got first 100 pips, 101, 111 pips, 250 that way, 290 this way. Gerard says hook us up. Okay, that's fine. I'm gonna try. I will try. So that's cool. If I drop down to a daily chart from there. So the question now is, are we going down or up? And when we go down or up, where are the checkpoints? Let's put that in green. That's checkpoint number 1. Of course, that's a weekly checkpoint there. I like this one. Why? This was at the time an indecision candle. before the next one formed. When that first candle formed, it could have been a downward move. And it is almost a spinning top. The wicks are slightly bigger than the body. So I'm going to look to see something interesting happen there. This here as well was the day that blew past that weekly level there. And then if we get beneath that, we have that there. This and this, I'm going to take this one. They're close enough. Let's see how many pips in between them. The high of that candle is 1408. The high of this candle is 14. So there's 50 pips in between them. There's 50 pips in between them. Okay. That's, yeah, 50 pips is nothing to sneeze at. Let's put that there. So that's to the downside. To the upside, it's going to be hard to show you that because there's not much. So to the upside, well, we're looking at, we'd have to go back to October 2017 and start putting in daily highs, lows, and daily levels there. I am not going to do that. Actually, you know what? Let me do that. Let me do a couple. Let me do the easy ones. So there's that weekly level there. And there's this one here. There is also this one here, which is where we are at the moment. Notice that right now price has been stalled by this daily high there. Anyway, so now in terms of looking for my trade, this my first trade of the week on this pair, if I am to get one, I'm going back to my reference chart with those potential levels in, right? Of course, I do know here, as I've shown you here, that I'm currently favoring a sell program until otherwise. So until something happens that reverses my daily bias. So if I come here, where did the week open? Remember I asked you that question? Oh, I taught you to ask that question. Where did the week open? The week opened here. First, second, third. This is the real week open because Sunday is always a manipulation. Sunday doesn't count. I'm going to put that there in purple for our chart. And this line tells me that's the weekly open. Right? So when I drop down, and of course, so that's the weekly open. This was the first weekly potential stop hunt. Nothing happened there. Nothing happened there. So I go to the next one. The next one was here. We've now seen a stop hunt reversal using this order block here, right? But it did not take out this low. It came and touched it equidistantly. It did not take it out. The low of that candle is 17207. The low of this one is 17215. So that low is still intact. Bear that in mind, right? This 4-hour low here has not been breached. It's not been breached. It's still live for a stop hunt this week. The weekly open as a vertical line. Okay, Kieran, I'm putting it as a horizontal line because I need that level. I need to know what side of that level I am during the course of the week. At any point during the week, I need to know, am I above the weekly open or below the weekly open? So, so this is the vertical line here. So let me do that if that helps you. Right? But I also need to know the level at which it opened, so I know what side of it I am. In fact, I'm going to remove that divider. So that's where the week opened, but that's the price at which it opened. Cool. So if I'm looking for a down week, then I need price to give me, excuse me, an entry above the weekly open, right? So if I'm holding on to my bearish bias from Friday, if this is what I intend to see, I need an entry in the premium area of this chart. These are levels that I'm looking at potentially, right? To give me a drive down to then take out this level here, which hasn't been taken out. But also, since this was the order block that held price coming down the first time, I don't expect it to hold it the second time if it is bearish. What is the next liquidity profile after that level? Well, there is one here. There's one there. But I'm not a fan of that. Why break this one just to come this far down? So I don't want to see that. I want to see it come to at least this level here. It works out very nicely because if this was the original expansion, if it gives a retracement, that's the 1618. Can you see that? Let's come back to this chart here. It took out that high and then took out the low of that same day. It's not in a sell program unless it reverses into a buy program today. Until that happens, we can expect it to come up into that region, blow out this level here, and take us back down there. Get that away. So, how will I know when this is ripe? If it does give me the ripe signal. Well, I'm going to go back down to a 1 hour chart. And on a 1 hour chart, I'm going to look for a 4 hour stop hunt. So this would be the first level here. That's a 4 hour high, right? So I'm watching. It's not reached the level I wanted to reach, Fibonacci wise, but I still have to give it some thought. If this is a 1 hour engulfing pattern of any sort, then I need to consider the fact that this might be the liquidity profile, the manipulation block. It looks like a wick on a 1 hour, but if you drop down to 30-minute or 15-minute, you'll see it. Let's go to 15-minute. 1 second. So it's that. Well, it looks like you have to drop even further to a 5-minute, but it's that long wick there. If I drop even further, that's it on the 5-minute chart. If you go back to 1 hour chart, actually no, sorry, not that one. Actually, it's the wick. It's the wick, which is a rejection order block. So that one, there we have it there. So could that be the reaction? Yes. Do I want it to be? No. But anyway. So until I get a daily engulfing the other way, for instance, this here has blown out. If you look at this here, this is why I'm a little bit iffy. This here just put that in red. This is the low of yesterday. It took out yesterday's low. It's now also taking out yesterday's high. Can you see that there? That's why I'm saying if this is going to play out, I need it to happen today. If price closes above that level today, I'm concerned. It means we've had a double reversal 48 hours apart, in which case we're now back in a buy program. See that there? That was the low of a day. It's taking it out. It's now taking out the high of the same day, the day being yesterday. On a daily chart, you can see it. At the moment, today's price action is engulfing yesterday. It cannot close that way. If it does, then we're back bullish. So for that hypothesis to be correct, price has to reject sharply beneath that level today. And so I will wait for a 4-hour engulfing south, not 1 hour now. I'm going to wait for a 4-hour engulfing south to confirm to me we're back in a sell program, and then I'm going to take a sell trade. Otherwise, I'm going to sit today out. If it closes above there today, we're back in the buy program, in which case we're now reaching for the objectives above price. Does that make sense? I know I've gone a bit deep today, but I'm trying to bring you guys along into my world. Any questions so far? I'm going to leave it there for today. I'm going to leave it at this today. I'm not actually, let me see. Should I do one more pair? Should I do one more pair? No. I think I've given you a lot to chew on today already. No trade today, Kiran. The answer is not yet. The trade for today so far, for me, was this one here. From this blue line to potentially this green or blue line here. It was a scalp. That would have, so 26. Yeah, you could have had a 2-to-1 already coming off here. So that was a trade I would have taken. That was a scalp that I looked at this morning and I decided to pass on in favor of a bit more sleep. It just wasn't worth it to me because I had a very late night last night. I'm hoping, because I've invested a lot of emotions waiting for a short, I'm hoping to see a reversal. It comes out of that level back into, in essence, if today has to close back below this green line, which it currently is at the moment. But I want to see a slightly further push up. This could be valid as it is, but I prefer to see it reach at least here. Right? Because of my Fibonacci preferences. And then push back down aggressively into this range. If it does, I could take a trade towards the end of New York into London close. But I probably at this point will wait for tomorrow, because I want to let the daily chart make up its mind what it wants to do. Except I'm scalping. Gerard, I think I've given people enough to chew on. So let me leave this. This is your assignment. Go do the same on the other pairs on our watch list, AU or GU. I'm also adding New Zealand NU to my watch list this week. So I'm watching 4 pairs this week: NU, AU, GU, and EU. Registered students, I will be available for the rest of today. You can send me your analysis. We can go back and forth on Telegram if you want. I'll keep an eye on it for the rest of the day. But go chew on this. All right. Cool. So I've got a favor to ask of you guys. The channel's been going on for it'll be a year in October, but we've only been using it publicly pretty much since about January. So we've been literally grinding on it for about 8 months now. We've seen a pretty significant surge in the last month or two in subscriptions. Initially it was mainly just for our students, the first batch and the second batch, and then a couple of people have started jumping on, and we're very grateful. We'd like to get it to 1,000 subscribers over the next couple of weeks. We're currently sat at about 390, 380, 390, something like that. But there's been a surge of about 50 in the last week. At that pace, we think we can push it up. So this is how you can do this for us. First of all, encourage everybody you know who is interested in trading just to subscribe. And tell them there's loads of free stuff. Tell them there's no other channel online that gives you all this stuff for free, whether or not you're a student. They don't need to register to be students. They just need to be subscribed to get the stuff for free. Secondly, yeah, I think that would be a start. Secondly, if you're watching and you haven't subscribed, what are you waiting for? Hit the subscribe button now. Like right now. Thirdly, on social media platforms, Facebook, Instagram, your own YouTube channels, if you have one, give us a shout, give us a plug. Whatever videos you have watched that have been helpful to you, whether the analysis or teaching videos, plug them on your platforms. Also, and this is very important, the algorithm that Facebook or YouTube uses, because it also uses an algorithm, works based on likes, shares, comments, and subscriptions. So if you now, beyond the chat, beyond the live chat, if you put a comment in the video once it has finished processing, so the actual comment section once the live stream is over, it helps us. If you like the video, it helps us. So please do that. Our likes to and comments to viewer ratios are not the best. We get a lot of engagement in the live chat, but then nobody goes back to engage with it afterwards. If you help us do that, we get to 1,000 if we get to 1,000 subscribers before August is over, which is possible at the rate at which we've been going the last couple of weeks. If we get to 1,000 subscribers, we will do something. We'll figure out something we can do to celebrate that benefits you. So we will give back some way, some form of way to say thank you. And of course, why stop at just being a subscriber? You can get access to our full training program for the crazy price of pretty much £80 a month, $79.99. In addition to the free videos you see on YouTube, you get access to pre-recorded content, to mentorship, to closed forums. We are almost done. We've had a lot of hitches, but we're almost done with finishing building our online presence, our website, and our training portal. This is what you get access to. And this is the weekly schedule that you get access to as well. There's nothing like it anywhere, in my opinion, anywhere on the internet. So how do you get on board with that? Well, very simple. Just send us an email saying you're interested in finding out about our program to that email address. You can also get in touch with us via WhatsApp, preferably Telegram, on that number. And we look forward to hearing from you. So I'll see you guys at 9:15 tonight. We'll see you guys at 9:15 tonight. Students, as usual, make sure all your stuff is set up to receive everything that you need to receive. Take care. Have a great week. Great day. Bye bye.